In this video, we are going to be analysing natural gas. We're just going to do this on the futures because it's easier to do everything. But what we can see is, this natural gas, or natural gas in general, has just been very volatile recently. We saw it up at its 52-week high around $10. But now we're seeing this, it has just really been in a strong momentum to the downside. And we're now around $5. We've sold off 50% in really just about 2 months. So quite a big move. Now, what are going to be the key levels I'm paying attention to? So we did have a level up 540, and we can see we just kind of went straight through this. And considering as well, not only was it a standard deviation, what it was that previous low, seeing it not even get a small bounce off this level was a bit concerning. So if this was something you were looking to start taking long or more of a swing approach, it's definitely something we would look for confirmation before entering this trade, just considering it's gone through this level like it was nothing, and this would be considered quite a strong level as it is. So do be cautious if you're trying to kind of catch this or trade this long, try and get that mean reversion or a reversal play on it. But yeah, really considering we just went through that level, make sure you're getting that confirmation. However you judge confirmation, just make sure you're probably getting some on this trade, because otherwise you could be in trouble depending on where your stops are. Now, we do have a level, we're kind of just coming into one, and this is at 4925. We can see we did kind of come into this level. This is basically where we closed. So it's kind of respecting this level, and that's kind of why we're staying there as of now. But it's all going to matter, I guess, when the Sunday evening when futures open. And really the key thing I'd be watching out is, where do we open? If we open below this 4925, we may fill that gap and continue down. And if we do, then we are paying attention to kind of 387 to around 320. On the other hand, if we are able to open and we kind of stay above this 425, again, not something I would look to trade instantly, but I do think we could see a move back to around 540. 540 relatively quick, because even if we were going to continue down, I could see it just trying to fill that gap. Actually, I don't even think it's created a gap on this side. No, it hasn't even created a gap actually. This because it's only a daily chart on the right. But I could see us definitely retesting this second deviation either way, even if we're going to continue down. So there may be a potential play with it in there. Now, if we did continue, then the only other moves we'll be looking up to the upside, and these would kind of be more resistances, obviously, and that would be 645. There's going to be that gap fill. We always pay attention to these gap fills because 9 times out of 10, you will come back and fill this gap at some point. Don't remember the last time I haven't seen a gap, within a year being filled on any type of future. So this will be a key level to be focusing on. And the way you can usually see with these gap fills, unless there is for any reason very strong momentum, but again, there'll probably be fundamental news on that. You'll probably see something like a natural gas storage blows up or something, and obviously then you're going to see it flying. These gap fills aren't going to matter, but if it's moving there more just on technicals, we're not seeing too much news come out about it, then a good way to usually play these, or way I usually look to play these, is come into the gap fill and really just take it short. You can have some tight stops on it. You could literally use a candle high. You're not taking on then too much risk, and your target can usually go down to that next level if you think it's going to continue down. Or again, you can always trade it on the intraday charts. Then you can get even tighter stops, but obviously your reward will be looking a bit less, but you could always increase size because your risk to reward will probably actually be better. But if we did continue high, then we are also paying attention to 675 and 695. And these would be the key levels we would be focusing on as of now, depending on where natural gas goes. Obviously, we do have levels further up, but on these kind of futures, we're looking to trade whether it's, mainly off the technicals. This is going to be what we're looking at in the near future. So, this is all we need to pay attention to. The only time you would kind of need these levels any time relatively soon is, again, like I said, if you have some big fundamental news, say one of the biggest natural gas storage units explodes, obviously that will reduce a lot of the supply, and obviously you'll see it soar, and that's when you may just fly through these levels. And the way I usually look to trade these kind of news or fundamental trades would be trying to just really wait for them to come into these levels, look to play it short, have a tight stop, so if it blows straight through, you're not in a bad condition. But if you do catch that top, your risk to reward is going to be crazy. And again, if it breaks that level, then you're just paying attention to the next one. Say example for $10, again, you got that tight stop, you could do maybe 10-15 ticks. If you get the crash, I mean, you're probably making 100 plus ticks on it. You can get some good risk to reward on these. Anyway, that is the breakdown on natural gas. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.